I wasted years trading on TradingView until I found this profit magnet line fix. We're using the double EMA with pullback. This is a trend following tool designed to keep you on the winning side of the market. It uses two exponential moving averages to show us the overall direction, but it specifically helps us spot those moments when the price takes a break. Getting the tool on your chart is very simple. Head up to the top of the TradingView platform and click on Indicators button. When the search window pops up, type in double EMA with pullback and hit enter. You're looking for the specific one created by a user named Hannibal. Click on that one to add it to the chart. Now, before we fix it, you need to understand how the basic logic works. This is important. At this point, you have two lines, a fast line and a slow line. When the fast EMA is above the slow EMA and the price is floating above both, you have an uptrend. The buyers are in control. When the price dips below the fast line, it is called a pullback. The basic strategy says you should buy when the price crosses back up. But here's the problem. If you trade this using the default way, you're going to get wrecked. Let me show you exactly why. Look at this Bitcoin chart on the 15-minute time frame. This is where the most people lose their money. The trend seems clearly up. The price pulls back and dips below the fast EMA line. The indicator eventually prints a buy signal when the price pops back up. If you follow the basic rules that most gurus teach, you would enter right on the trigger candle. You would set your stop loss and hope for the best. But look at what happens next. A few candles later, the market brutally reverses against you. It haunts your stop loss, takes your money, and kicks you out of the trade. Then, almost immediately after you take the loss, the price turns around and goes exactly where you thought it would. This is a trap. I wasted years falling for this. I was right about the direction, but my timing was wrong because the default settings are too noisy and I had no confirmation. So I stopped right there. This is where we change the game. We're going to apply the fix package. This involves two specific steps. First, let's tune the engine. Double-click on the indicator line to open the settings. Go into the Inputs tab. I want to change the fast EMA period to 45. This is the sweet spot. It makes the line sensitive enough to catch the move, but is smooth enough to ignore small bumps. Change the color to something bright, like white. Next, this is crucial. Change the slow EMA period all the way to 400. The 400 EMA is your anchor. It represents the massive institutional trend. If the price is above this line, we only look for buys. If it's below, we only look for sells. Change the color to yellow so you never miss it. Finally, go to the Style tab and make the lines thicker so they're easy to see. Now that the settings are fixed, we need a second part of the solution, the profit magnet line. Let's look at the same failed Bitcoin example again, but this time with our new settings and our secret weapon. We see the pullback happen. The price drops. We do not panic. We do not enter blindly. Instead, we study the shape of the pullback. We take our trend line tool and we draw a line connecting the top of the pullback wave. This line is what I call the profit magnet line. We're waiting for a definitive proof that the buyers have won the battle. We wait for the price to break above that trend line. But a simple break is not enough. We need the two-candle rule. We need two green candles to close completely above the trend line. One candle can be fake out. Two candles show true commitment. In this example, we watch the price breaks above the line, we get the first green candle, then we wait for the second green candle to close. This is our valid entry signal. We open the position right there. By waiting for this confirmation, we completely avoided the fake out that killed the previous trade. We place the stop loss slightly below the lines or the recent swing low of the pullback to give the trade room to breathe. For the target, we aim for the 1.5 times our risk. This ensures the math is always in our favor. Let's move forward on the chart and see another example so you can really lock this concept in your mind. Here, the price is nicely above both white and yellow line. The trend is healthy. Suddenly, we get a deep pullback. The price actually dips below the line. This is the moment where amateur traders get scared and sell their position. But we know better. We stay and we wait. Eventually, the price rallies back up above the line. Do we buy yet? Absolutely not. We draw our profit magnet line. We connect the tops of the candles during this pullback phase and extend the line to the right. Now we practice patience. We're like the snipers waiting for the perfect shot. We need the price to punch through that resistance line. There it is. The price breaks the line. Now we count. One green candle closes above, two green candle closes above. That's the confirmation we need. The market is screaming at us that the rest period is over and the uptrend is starting again. We open the buy position with set our safety stop below the recent swing low structure with target 1.5 ratio. You can see how the price explodes upward shortly after because we wait for the right moment. The profit magnet line keeps us safe while the market was deciding what to do. Let's slide the chart further along and look for another condition. This happens all the time. The market is moving up, but it starts to run out of energy. We see red candles forming. The price pulls back down towards our white line. It peers through it. This is our alert to pay close attention. We grab the trend line tool again. We draw the line across the downward slope of this correction, and we're watching every candle close. The price tries to push up. It breaks our trend line. Now we start counting. We get the first green candle closing nicely above the line, and we wait for the next 15-minute candle. It also closes green and stays above the line. This eliminates the fear of fake out. We open the buy position. By waiting for the second candle, we avoid the chop and volatility that often happens right at the breakout point. We place our stop loss securely below the swing low, ensuring we aren't taken out by random market noise. The trade runs perfectly to our target. Let's do one last example just to make sure we have this mastered. Moving along the chart, the trend is still bullish. Price is above the yellow line. We get another pullback. It looks choppy and messy. This is where the amateur traders get crushed trying to guess the bottom. They try to catch the falling knife, but we have a system. We draw the trend line across the top of this choppy price action. We let the market struggle while we sit on our hands and do absolutely nothing. This discipline is what separates the winners from losers. Finally, the buyers step in with volume. The price shoots up through our trend line. We look for our rules. One green candle, two green candles. The setup is valid. We enter the trade because we waited for the profit magnet line to break. We avoid all the mess and entered exactly when the momentum returned. This strategy turns the double EMA from a simple lagging indicator into a precision weapon. However, I have to be real with you. None of this matters. The settings, the lines, or the confirmation do not matter if you do not follow a strict risk to reward ratio. You can have a 90% win rate and still lose all your money if you don't know how to manage your position size. I have fully explained the best risk management strategy in this video you see on the screen right now. It is the missing piece of the puzzle that will protect your account, so click on that and watch it as your next video. Alright, happy trading!